Okay, what's going on, everyone? In this video, we're going to be talking about the loan estimate and closing disclosure. Basically, if you haven't watched the other video on how to fill out the loan application, it's going to be like sections 1 through 10, filling out basically your information, financial information, and other personal questions in order to move on with the loan. The reason why each loan is so specific to each individual. So like, let's say you fill out your application, you make X amount of dollars, you have X amount of debts. And so the reason why we need you to fill out the application correctly is so that we can find out like which mortgage best fits your situation, because not everybody has the same financial situation. So we try to, find the best loan that fits your criteria, and basically the more information that you can provide us, the better. And that's what I talked about in the previous video, where if you were to fill out the loan application, we can provide this loan estimate for you, which is the one I'm about to show you in this video. We can provide this loan estimate to the best accuracy that we can. So let's go ahead and get started. So this is the loan estimate. Once you've filled out the application, this is going to be sent to you basically immediately as soon as you give us the information that we need. It's 6 main criterias that we need. In this loan estimate, you're going to see the name of the bank, their location, and it's going to say save this loan estimate to compare with your closing disclosure. I'm going to show this closing disclosure right now. This is the closing disclosure. I'm going to move this over to the side here. Okay, so this is the closing disclosure, and you're going to be able to see okay, let's make this bigger so you guys can see it. So this is the closing disclosure. It looks exactly the same as the loan estimate, except this one has more information. So this one has 5 pages. It goes more in depth with closing costs, other costs that comes with this. It's gonna include taxes, insurance, everything. So for the last page, we're still gonna need your signature and for you to date it, and if you have a co-signer, that they sign it and date it as well, to confirm that you've received it. So let's go back to the loan estimate. The loan estimate right here shows that the date was issued for a certain day, and the rate lock, it's good until a certain amount of time. So date issued, you have to pay attention to the date and when it's good for. If it says no, it's not rate locked, that means that it's floating and you're basically shopping and waiting for the interest rate to go down. Or if it goes up, then we pretty much lucked out, and we lost on saving you the interest rate that we currently had at that time. So for example, this one is going to be for a loan amount of $162,000. The interest rate that we are providing for you is going to be 3.875%. So if you look all the way down here, it's going to say the APR, the annual percentage rate. This isn't going to be your interest rate, okay? This is just showing you, what's currently available in the market. So when you see this number, it doesn't apply to you. It applies to just, whatever's currently on the market. This number applies to you. Because as a mortgage loan officer, as a mortgage loan broker, our job is to make sure that you get the best interest rate that you can get. And so this is going to be the most important part right here. We're going to try to get you the lowest interest rate that we can get for your current situation. So we're going to go back up to your applicants. It's going to be you, your name, your co-borrower, whoever is also going to be on the loan as well, where you live. This is where it says property. This is the address that you're trying to purchase. And the sales price, remember in the previous video, we asked if we can get the appraisal for the house or estimated value for the house. That number is going to be right here. You'll ask the loan officer for the appraisal, and the loan officer will call for that appraisal. So you're going to still have to pay for it. And remember where it says right here. We're jumping back and forth, but it all makes sense in the end. So in the appraisal section, it says, we may order an appraisal to determine the property's value and charge you for this appraisal. We will promptly give you a copy of any appraisal even if your loan does not close. You can pay for an additional appraisal for your own use at your own cost. So remember, value and charge you for this appraisal. The additional appraisal is at your own cost. Either way, you're going to be paying for the appraisal. So keep that in mind when you see this sales price. So it's not a huge amount. I think the appraisal fee is, where is it? Appraisal fee is right here, $405. So depending on who you're going to be using, it could be more, it could be less. Typically what we charge is like $500, I believe, but it really depends on the property and who you're hiring. So keep that in mind. Moving on. The loan term, 30 years. It looks like it's a conventional loan type. Yeah, conventional. So the purpose is to buy the house. The product type, 30-year fixed rate, conventional. The loan ID, they're going to assign that ID for you. The rate lock, again, we mentioned it a while ago. So the loan amount, how much we can get you for the interest rate. The monthly principal interest doesn't include tax. Notice that it doesn't include tax or insurance. So this is just the monthly principal and interest rate for a $672,000 loan. But in California, it's usually anywhere between $400,000 to $800,000 for your typical loan. So does the loan contain a prepayment penalty? So in this case, it does. If it doesn't, it'll say no. So you got to pay attention. On this whole entire slide, it's going to say yes or no. So can this amount increase after closing? You got to keep that in mind. If it does, anything that says yes, pay close attention to. Balloon payments, there is none. Projected payments, okay? So it says projected payments for the first 1 to 7 years. The monthly payment's going to be $1,050. 8 to 30 years, it's going to be $968. But for a fixed rate, typically it's going to stay the same amount throughout the entire loan. This is where the taxes and insurance is going to be at. So property taxes and homeowners insurance right here. This, if a lot of people are wondering if taxes and insurance are going to be included inside the loan estimate. Yes, it does right here. Is it in escrow? Yes or no? Because some people don't use escrow. For the most part, everything that we use is going to be through a third-party company. It's going to be escrow and title. So for this example particularly, it's going to cost $16,054 to close. So that's how much you're paying out of pocket. Sometimes some of the things for closing costs can be rolled into the loan. So definitely check in with your loan officer to see if this number can somehow be added to your entire loan amount. If you want to do that. Or you can pay it up in cash. So page 2 is going to show you how much the loan officer is charging you, services that you can and you cannot shop for. It says that you can't shop for these because these numbers have to be exact. Like credit report fee, like you can't really change the credit report fee because it goes through the credit bureau. So that's why, you can't really shop for that type of price. Now services that you can shop for, title, survey fee, pest inspections. So all of these you can pay for. You can shop around for your own. Your lender, however, is going to give you a list of preferred recommended people that you use. But if you don't choose them, these are the things that you can choose. Other costs, government, prepaid insurance, title and escrow, which is optional. Title, it's not really optional, but I mean, you should definitely just pay for it anyways because you want to be safe whenever you buy the house. So in total, where it says lender credits is basically where the lender is going to be paying you back any money, but in this case it doesn't. And the reason why it's $16,000 and not $26,000 is because you initially had a deposit when you put this in. In this example, they only put $10,000 into the deposit, so this is where they're taking it out. The additional information about the loan, however, remember that this interest rate doesn't apply to you. This is just what's currently on the market. The one that does apply to you is this number, this interest rate right here. How much you're going to pay in 5 years, the total amount of percentage that you pay in the interest for that 5 years, the appraisal, okay, the assumption. The assumption means that The assumption just basically means that, can your mortgage loan be transferred to the next person that buys your house? Is it possible for that other person to take over that loan? If it says will not allow assumption, it means that you're not allowed to transfer it on to the next person. But if it's checked right here, the lender says, yeah, you know what? Under certain circumstances, we will allow you to transfer the loan. Yes or no? Homeowners insurance, that's important. Late payment, there's going to be disclosures on prepayment penalties. But if you're late 15 days, they're going to charge you a certain amount. If you're late 30 days, they might auto enroll you into the pre-foreclosure process. Refinancing, foreclosure takes a while. Like, it takes, I mean, you at a certain point, when you're behind. And so you have a lot of time to catch up when you are about to hit foreclosure, but definitely just stay on time. Save yourself the credit hit, because once you get into foreclosure, your credit sinks really hard. So refinancing, does your loan have the ability to refinance? It's going to say here. Servicing. So servicing means that, if a bank first secured your loan, they might transfer your loan to the secondary market, or they might transfer it to another bank. If you're making your payments to ABC Bank, now that ABC Bank is transferring it to XYZ Bank, it's going to say here. So the last part is to confirm that you've received your loan estimate. You as the signer, you as the borrower has to sign it here. If you have a co-borrower, they'll sign it here as well. Once all of this has been sent, you will get your closing disclosure on the following. After you sign your loan estimate, 4 days later, from sending out your loan estimate, you will get a closing disclosure. So this closing disclosure is going to be, all of the information from, the last loan estimate, except here's the main difference. This form is a statement of final loan terms and closing costs. Compare this document with your loan estimate. So when it says that this is the final form, that, everything on here is going to be saying how much you're approved for, what you're buying, who the lender is, who is the loan officer. In the last one, where is it? In the loan estimate, it's going to say right here. So it's going to say who was the lender. So who's the bank, who's the loan officer, who's the mortgage broker, what's their license, what's their contact information. If they're servicing my loan, who am I calling? The phone number is going to be right there. The email is going to be right there. So you're going to be able to contact the person that originally helped you with your loan. The sale price of a property, you're going to get all the information for the loan in the closing disclosure and more information. So assumption, we talked about that with the loan estimate. There's going to be other features on the loan. Late payment, again, 15 days. They might charge you 5%. Negative amortization, there's a possibility that you might owe more than the loan itself if you just pay the minimum. So that's why this is here, so that you can find out more about that information. Partial payments, it's going to ask you, your lender, they may accept payments that are less than the full amount due. If they do that, then how much is it going to end up costing you in the long run when you do partial payments. Escrow accounts. So for now, we do use escrow accounts. It's the most preferred method. I want to say like 90% of most transactions in California are through escrow. So, you got to pay attention to this side where it says all of the information for escrow accounts. In the future, definitely look into that as well, because it's going to ask you like, okay, so, what if taxes increase? What if property taxes increase? And for the final part, we still need you to sign for the closing disclosure once you receive it and date it with your co-signer. So once you fill out this residential loan application, again, it's going to be 10 different sections, all about your personal information. I cover this in another video, step by step on which parts to fill out, why this matters, how many pages, how many disclosures, where you have to sign, who's the loan originator, who's the bank that you're going to be signing with. So yeah, if you guys have time, watch the video where I talk about walking through the steps of this whole entire application, So hopefully you guys like this video. I will try to cover as much as I can in the next one. If you guys have any questions, please leave them in the comments below. I will see you guys later.